Despite the upheaval, the Reserve Bank is expected to deliver a fifth consecutive cut to the OCR tomorrow. It would be welcome news for businesses still struggling with weak demand as mortgaged homeowners move onto lower interest rates. But as Zane Small reports, the global market turmoil has seen KiwiSaver balances fall, which could dampen first home buyer demand in an already soft housing sector.
This well-presented four-bedroom home in Auckland's Mount Roskill has attracted plenty of potential buyers for real estate agent Rachel Berry.
We would have had about 60 groups through. We've got the auction tomorrow. We've got probably 4 to 5 registered bidders for it.
Though it might be the exception, because the latest QV house price update out today notes that although interest rates have reduced markedly, buyers are still finding the current economic climate to be a challenge. Job worries and a rise in unemployment are causing many to be cautious and play it safe right now. Home values crept up just 0.2% in the 3 months to March to a national average of around $904,000, with QV noting that market conditions have remained pretty soft, and that's thanks in part to ample supply of listings. And while that's good for first home buyers, the global financial market volatility has seen KiwiSaver balances fall, and that could affect deposit withdrawals and weaken demand.
It is actually a really good point because the first home buyer group does rely on their KiwiSaver and the deposit amount they have in there.
Look, it's always upsetting to see your balance fall, particularly just before you're about to use it for that house purchase. So yes, we've had members doing withdrawals that are maybe putting them on hold or just waiting to see what plays out.
This Westpac data shows the value of $100 invested in KiwiSaver 1 year ago. You can see how it's fallen sharply amid the global market turmoil, but more so for growth funds.
The more aggressive funds or the growth type KiwiSaver funds, they will have been impacted the most because they have the most exposure to global share markets.
In terms of that market volatility, I think people are more obsessed with the OCR, to be honest.
If that includes you, the good news is the Reserve Bank looks set to cut the official cash rate again tomorrow. And it'll be announced by this man, Christian Hawkesby, who's just been appointed governor for a 6-month term, after his predecessor, Adrian Orr, stepped down suddenly last month.
I think they're going to cut the cash rate tomorrow by 25 basis points because that was the plan that they outlined back in February.
That would bring the benchmark lending rate to 3.5%. And Kelly Eckhold expects that tomorrow we'll hear commentary indicating a firm intention to get the OCR to 3% soon.
Now they're really thinking about some of those downside risks to global growth now that the US authorities have imposed these tariffs.
I think a lot of people worry that the market's going to take off. In fact, what we're seeing is a very stable market, which I think for us as Kiwis is healthy.
A positive perspective to end on as the market opens the door to what's hoped to be more interest rate relief.
Well, kia ora, Zane. So there's some new data out today on business confidence.
That's right. It's a quarterly survey of around 10,000 businesses by the New Zealand Institute of Economic Research. It shows that business confidence has improved, but that trading activity still remains relatively weak, and that is still driving caution when it comes to hiring and investment. And once again, it's the construction industry that looks to be really feeling the tail end of the economic slowdown due to a softer pipeline of construction. It shows that there is still a lot of room for growth in the economy, and that gives an insight into why the Reserve Bank is continuing to cut the benchmark lending rate even when price inflation is already within the target band.
Okay, and of course we'll be across that tomorrow. Zane, thanks so much.